The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, traders. Happy Wednesday. Wonderful Wednesday, Dennis says. Thank you. Good afternoon, Fred. My friend, it's good to see you. I hope all is well. How is the weather in New York? It's still hot. I'm ready for fall. You know what I mean? Like, it's just, and I get it. People are like, well, Scott, you live in a desert. And I'm like, I get that, but it does cool off. It turns to fall. It's nice and seasonal. Hi, okay. Good to see you. Beautiful, cool day. I'm envious. I think it's 95 here. I don't know. I mean, it's cooling off at night, and you can start to feel a little bit of that fall crisp at night where you're like, ooh, there it is. Yeah. Did I say hi, okay? Hi, okay. Let's give it one more second and just kind of chit-chatting. It's light today. This market's shaping up, though, right? Am I wrong? I feel like it's shaping up. I'd like to see a nice little consolidation, 2 days-ish, and then we're ready to go. It doesn't even have to be that much, to be fair. 57 to 72 today on Long Island. All right, that's pretty reasonable right there. Yeah, that's not too bad. I agree. All right. Let's get started. I'm Scott. I'll be your host. Live trading room, stocks and options, closing bell. Still hot and humid in here, Orlando. That's all you know. A little bit about me. I have crossed the 25-year threshold. I have been in trading, participating in these markets for over 25 years now. 1999. I was 1 year out of college. I had started a business, was off season. I got a temp job at Fidelity, and I'm like, oh, I love these markets. Never looked back. Temp job turned into a licensed job, traded the whole time. Here we are. That was an interesting time, 1999. Prince knew what he was talking about, mentioning how to party in that year. Disclosures, there they are. Okay, let's go look at the markets. If I could get out of this. There we go. Got going on. Okay, gold star to whoever spits out what candlestick they see today. First to get it. We don't have many people, so anyone want to take a stab at it? I'll give you a hint. It's a type of doji. A type of doji. And it's also the name of a movie from the early 90s about the Wild West. Tombstone Doji. Come on. Well, so many good hints, you guys. I was about to say Wyatt Earp. Wyatt Earp and Doc Holliday. Tombstone Doji. I mean, it's on borrowed time, I feel like. this has been a hell of a run. And along the way, no above average volume. We had one day that was close. But other than that, it's just sort of like there's no sellers. And if there's no sellers, well, that makes life much easier for buyers. All they got to do is blow on it and it goes. But over the last 3 days, you can see it's really starting to wind down. Today, we're up 0.25%. And our volume average 58, we'll call it 59 million. Right now we're at 23.5. Maybe we get to half. So, yeah, it's tough here. We're not getting new trade signals sitting here at this resistance level. This thing is overbought. Obviously, we're looking for this thing to have some kind of a consolidation. That's a nice little level right there. Old trend line, 50-day moving average. This pulls back a little bit, but it might not. I mean, it could be just a flag, 2-day pullback, and then we go. We have to be ready for that. 1, 2, turn, bam. This is not going to be of use with a flag. That's just, you got to recognize that. It's not going to be helpful. The flag is a flag. Maybe Stella helps with that, but I don't know. We'll see. We'll look at the VIX here in a minute. It definitely looks like the pause is on. Now, if I saw this same exact candle down in this area, I would call it a dragonfly doji. It's the same pattern. Dragonfly doji and tombstone doji are the same pattern. And you'll notice that in that regard, the implications are not the pattern itself, but the context of the pattern. It's the context. That candle at or near support, dragonfly. That candle at or near resistance, tombstone. And that helps then to derive implications about what happens next following. Okay. Let's go look at what's going on. There he is, Jer Bear. Fed minutes. Most officials favored September rate cut. I mean, we're talking most favored, so there's still a few holdouts. That doesn't sound like verbiage that equals 0.5 a point. That sounds like verbiage that equals 0.25 point, which is exactly what we're expecting. Let's jump right there. Let's jump right here. And you'll notice that we went from 3-1 to 2-1 to now only 1.5-1. I don't know. I'm in this camp. Let's get it. This is the 0.25 point. This is the 0.5 point. A, 0.5 point. B, 0.25 point. C, you're over by your no cut. This is a quick impromptu poll to see if everybody's awake. A, B, or C? A, 0.5 point. B, 0.25 point. C, no cut at all. I don't think we need anything on the outside of that. Fred says he is a B, 25 basis points. Slow and steady. Love it. I'm with him. This is me and Fred and Dennis and LK. All right. Anybody else want to go? Looks like the voters are all here in the B column. No C's. no ace. So we're a little more conservative as a group than the market as a whole. I don't even know if I'd say more conservative. I just think we're more realistic. We know that the market just gets so caught up in its hope. Oh, we sure hope we get 0.5%. It'd be great. Why not ask for 3/4 if you're just hoping? Okay. Good stuff. What does Stella say? Let's get to her. Did we miss anything? I'm jumping around. Target looks good today. U.S. employment falls by 800,000 in new revision. Okay, so we heard that this was coming. As of March 2024. Okay, so wait a second. What's the report? They're revising it as of March, so we're already 6 months past this revision. I guess I'm not understanding. Revision. All right. I don't know that really means anything. The market's not responding to it. Here it is. It also triggered this, which shows the recent rate consistent with that which typically precedes a recession, other than the context of where it started, which was at historic lows. If you go look at the starting and ending point for the 9 other times that indicator triggered, I wish I could do this. I wonder if ChatGPT could do it for me. I'm going to ask it later. I'll tell you what the results are. What was the starting point? What was the ending point where it triggered that 0.5 point increase in a year? Because if it's at 6 and goes to 6.5, yeah. But if it's at 3.6 and goes to 4.2, we're not like, oh my God, what's happening? We're like, it's 4.2. Relax. What else? I think that's everything from here. How to prepare for a layoff after U.S. jobs are revised lower. That doesn't even make sense. How to prepare for so they're saying that from like March to 2023 to March of 2024, they're revising it down. This is my understanding. Maybe I'm wrong. It's over a period of a year. It's not 1 month. That's like over the period of a year because they've adjusted the average number of jobs from 240 to 170. So they adjusted it down. And that's from 6 months ago. Over the last 6 months, we've still gotten numbers that we've seen. Could those be adjusted down? Sure, but we still got what we got. The market's not responding. What does that have to do with layoffs? That's how to prepare for a layoff. It's just nonsense. America is looking for jobs at the highest rate in 10 years, which is interesting because jobs are still at a good number. So I'm not sure what the issue is there. Okay. What's left? Jerome. Jobless claims still well under 250. That's our trigger point, and only if it hits past that for 3+ weeks. Then on Friday, Jer Bear is going to be in Jackson Hole. I sent him a couple of supportive texts. He didn't respond, but behind the scenes, I'm actually trying to position my guy, the hallowed and revered Dr. Sir Arthur Goolsby. And don't be like, his name is Austin. We're working on that. He's a little resistant, but I think he should change it to Arthur. It just has a better, more distinguished ring to it. Goolsby for Fed. Goolsby for Fed. All right, what's next? Let's go look at Stella. Stella says, so she's still looking at this little hiccup followed by a bullish move, followed by, I mean, she says bullish. She's back. My posture, I jumped pretty well, back to a 3.5. In preview, I'm expecting it to go up at least another point. So I agree with her. I'm back to more bullish as well. I dropped a little bit. I stabilized. And then everything's looking better. And I'm expecting it to continue to rise. It's looking stronger. Great. We seem to have shaken it off. Good news. So she likes that. Let's go see how the other indices look from a momentum standpoint. Here's the QQQ. So on the Qs, Stella says it might consolidate. Still uncertain what the post-consolidation. It's not saying it's not going to go up. It's definitely not saying it's going to go down. I find that viable. I find that if it drops and then it only drops for a couple of days and starts to turn, she's going to be like, oh, yeah, no, this thing's going to go. You know that we're communicating better. I'm getting my points across better. IWM, the small caps, a little iffy. Consolidation with an uncertain post-consolidation move. Let's go to the Dow. I expect we'll see something more like the S&P. You can see it's got a little bit more there. So I don't know. For me personally, if you look at my market posture, one of the concerns is the major market movement. My volume, I'm expecting to possibly go to 0. And my my major market's not bad, actually. Sector rotation, a little different. Okay. Seasonally, let's take a look at this. We have August 21st. That puts us right in this area here. What do we expect? We're looking for a bounce. Now, based on what we're seeing, I'm not looking for this to go lower low. I mean, it could. I could be wrong. Just out of the blue, we could see this thing start to ramp up. And I'm certainly going to be cautious in here. But I believe that we could, if things go well with the Fed, we could definitely be looking at a full fall trend. Stella looks like she might be open to an iron condor. Yeah, she sees a little bit more sideways. So the hard thing is the premiums. Let's go. That's a great segue to the VIX. So here's the SPY. Let's move now to the VIX. So the VIX is up a little bit. It's so weird with this big spike. It's hard to zoom in. You might think, oh, zoom in so we can see more clearly. It's almost like harder. You're like, wait, I can hardly find these candles. It's now pushing up from here. I don't see it getting above 20 without some kind of crazy negative catalyst. I don't, as we look at the Fed becoming increasingly likely to keep rates or to push rates down, I think there's a good chance that we may see it up one more day or two, and then it starts to roll over. And when it rolls over, and again, I'm looking at that as a high. I'm thinking I mischaracterized and didn't call that a lower high, but could have. And then it just dropped precipitously from that point. And now we're saying, let's look for another lower high here. Okay. Questions, comments? Concerns. Let's go get a quiz. Yeah, it feels like this is the consolidation. I mean, whether we get another day or two, I mean, it really hasn't had much of a pullback. If this is it, this is further confirming the renewed strength that we're finding in the market as of now. Okay. Let me get my keyboard a little closer. And all right. SPY, let's dig in a little closer. Ooh, you can see the selling pressure here. So I feel like we're watching a few of these last ditch attempts. Buyers are like, all right, we love it. And the sellers are like, nope. The buyers are like, okay, we're trying. Nope. Okay. This 558, that's an important threshold, I believe now. You can see it played a role back here as well. If we break that 558, I feel like that is clearly where the consolidation has come. And then once that consolidation ends, I'm going to be looking to trade that. So yeah, let's put it. I'm going to go. This is going to be an interesting one. I'm going to go here on this moving average. Here on this moving average. I have a feeling we're only going to have A's and C's. $560.15. Dennis is like, oh no, what did I just do? Come on, Scott. Oh, there it is. What is going on? $560.15 by $560.65. 50 cents. 50 cents. And Dennis says he's going right in the middle at B. Fred says, I think I see an A by the end of the day. Maria, hello, Maria. Welcome. Thank you for participating. Glad to have you. She says B. We need more participation. I'm going to give you my answer. I'm going to go look what Stella says. Let's go see. I'm going to go back to the SPY. Take this down intraday. And at this period of time, the close is 559.25. 559.25. Okay, Stella's a C. I am going to be an A. I think the buyers are still going to make one last effort. I don't think they're going to get it back up here. But if I were to guess, I'm going to say that's my range right there. Scott. Okay, nice. Let's see what happens. Let's get this chart back out and let's go look at a watch list. What is moving? So you can see that for the last 5 days, I've told you I like Apple. But Apple is overbought. And then it went a little bit, when it's just going sideways and sideways and and it hasn't gone anywhere in that period of time. What am I looking for? A pullback. Whether it's a full pullback that goes into next week, maybe it gets back to here and turns. Whether it is a flag, this is definitely a pull type of a shape where I only get just like a small consolidation down, and then boom, we pop out of it, right? If it's a flag, this is not gonna work down here. If it's a consolidation where it gets back down towards like the 50, then the stochastic should dip at least, not all the way. I wouldn't expect it to drop all the way back below the old oversold level, but I would expect that it could at least get into the middle and then turn from that point. Something like what we see over here, right? Where it went up, has this little consolidation, starts to turn. That's the signal. Now you can see it went up. Maybe you caught that little piece. Maybe not. If not, hopefully you got this next piece here and got a nice run. But once we get out of this, that's what we're looking for, is the ability to trend. We just V'd. We had a V. I don't think, we're going to get one move. I think we should get 2 or 3 moves. And that's across the board. We're seeing this strength across the board. But first is, what's the first trade going to be? If it's a flag, it's not going to pull back much. If it's a more of a consolidation, then we will see this thing come all the way back. Be ready for both. That's my advice. Give me your thoughts. Okay, let's keep going through the watch lists. Amazon, it's got to pull back. We can't buy it overbought like this. Where are the pullbacks already happening? Financials. Financials. First and foremost, we can see it here. AXP. Oh, look at this spotlight. I don't know how I did that. Pulling back. This definitely looks like it's going to stabilize or at least dip into this middle area. AXP, looking bullish. Bank of America, what has it done? Day 2 in a consolidation. It hit a new high. It's pulling back. The stochastics has now dipped into that middle zone. 2 for 2 out of the financial sector. BLDR, what do we have? It's not really I don't know. I guess you could see that as a setup. It's it's industrials. I think industrials has a bit of strength as well. City. What is it doing? Pulling back. We hit this new high. Now we have this pullback. Where are we seeing this pullback to? Caterpillar, you can see here, we have a consolidation. But we don't have this ready to pop. So as far as some consumer defensive stocks go, I had kind of pulled back my interest, and I think I may have been a little bit premature. I mean, today it's paused, but it's you can see it pulled back. It got this move here. but it hasn't gotten to a new high. So it has moved a little bit, but it hasn't moved to a new high. CMG, ooh, now that's interesting. It was consolidating. It busted out of it, made a new high. As it was making a new high right here, it got bad news and it gapped down all the way back down to here, popped up out of it. I think it's viable, but I would say for me personally, I would rather see this thing, since it's gone through this kind of a crazy reaction. I think I'd rather see this thing make a move up, get above these moving averages, and then take the next consolidation where it stays above the 200, something along those lines. Okay. Costco. See, I was thinking about Costco, but I'm like, is this the flag? I ultimately said no. I'm glad I did. Waited till the end of the day. I think we may still be seeing this as the overall consolidation and still waiting to see if we have more pullback. Hard to know. We'll see what happens. Okay. Carvana hitting resistance, needs a pullback. The Dow hitting resistance, needs a pullback. Fastenal tried to move, pulled back, jiggled a little, starting to move again. It's not an entry for me right now. Again, it's one of those that it's chopped around enough that I'd rather see more consistency before thinking, hey, let's just dive in. Bitcoin. I mean, it's off its lows, but you can see it hasn't managed to get back into this upper echelon, not even into limbo. I would say the upper echelon is here above 55. The limbo window is between 55 and I would say basically 50. Right? 50 to 55. You can see it just flirts around in there, pops back, flirts around, pops back, flirts around, drops more. Now we're down here. I don't know what to make of it. Gold is bullish. Now starting to pull back. General Motors, no let up. What do we do with that? Nothing. There's nothing we can do. I'm not going to be like, oh, well, now that it hasn't let up, I'm going to go jump in. That's what you do if you want it to drop on you as soon as you enter, because you're going to call out the top. Fred is joining me as an A. I think I missed that before, Fred. Sorry about that. Okay, Google. I mean, it's kind of done it had this consolidation. And it did this, and it had this little bit, and it popped up, but it didn't get very far. What am I thinking here? If it pulled back, I would let it test this level around 160, but not break it. And then think to myself, maybe now I could get on up here to the next one. It's too late for anything now. I don't think there's anything here that says it looks like it's moving. It's just a matter of being patient and waiting. Triple top, potentially, but definitely a resistance. Actually, I take that back. I'm not going to say triple top. It did hit the same high 3 times, but unless it takes out and breaks below this bottom level, no, I think it's just hitting resistance. Small caps. Okay. I mean, they're overextended like a lot of things are, like most things are. And the thought process now is just watching and waiting to see what comes next. JP Morgan. Hitting resistance. It looks very bullish. Flag coming out of the V. We'll see how much consolidation it gets. I don't think we're done yet. I think we have to wait and see. But we have to deal with the possibility that it could just go again, and you'd have to decide what would make me get in. What kind of parameters would I set up? I think a Heiken-Ashi type of an analysis would be useful if that was something you ended up doing. But yeah, things are looking bullish, but we would love to see some kind of consolidation to give us a setup that's a little bit easier to sink our teeth into. Home builders, they just started grinding higher again. Coke. Well, earlier today I'm like, oh, Scott, you should have been more willing to look at the defensives, but now all of a sudden it's right back down, and I'm thinking, okay, maybe I'm all right. Added McDonald's. Not that I like it now. Obviously, this is another one that just broke out. It had a good breakout. And now we hit a new high. What am I thinking? The next consolidation down is where I would find the trade that I'm interested in. Meta. So Meta was one that I was thinking looked like it was breaking. And I think if you thought this thing could continue, this is one that's viable for it. Yesterday's high was 531.09. We're ahead of that now. It doesn't have the Heiken-Ashi yet. So you could come in and put a stop just like underneath. I'm in at 533. I could put a stop in maybe 524, 9 points. I could easily get 30, 35 points out of this thing. So if it looks like the market's just going to start running, this is one that I'm thinking about for that purpose. So let's keep moving. Morgan Stanley is flagging. You can see that based on what we're seeing right now, I would say the financials is the closest to new signals, but there's also possibly technology, not the software yet. But if you look at Micron, a little bit of a pullback there. Netflix is pausing. NVIDIA, not really. I don't know. I guess kind of. TSM is pulling back a little bit, so we have some there. What do we know? The dollar's just dropped out, which is helpful to the market, right? And this is again pricing in anticipation of the Fed moving into a more accommodative policy. where they're looking to cut interest rates. Interestingly, when we had our last nice good bull run back November, December, January, February, you can see it dropped out and then it started coming back. Yeah, we'll see. We'll see. Here's the VIX. Ultimately, we are finishing up 3.5%, even though the market looks okay. A little bit of fear, but nothing too much. So I'm leaning, and I don't know what everyone's take is on this. I'd like to hear from the group. I am bullish. I would prefer a pullback, but I feel like right now the momentum is with the buyers. The Fed, definitely the verbiage we're seeing, especially after getting some confirmation today. I mean, we may get a little bit more info, and the market likes that. Okay. Where were we? Walmart. So I like Walmart quite a bit. Walmart, like a lot of things, is overbought. It's overextended. I need it to consolidate back down. I need to see a selling cycle, and then we have something that we can latch onto. Right now, you still have people who are pulling the trigger, and the motivation is FOMO, right? The motivation is FOMO. Okay. Looking at the sectors, what do we have? XLB. Materials are actually pushing just a little bit today, interestingly. We've got communication services. I mean, the buyers are all the way back. There's no argument. It's all the way back up to the old highs. Are we expecting it to break resistance with the volume that we're seeing now? No, right? Most definitely not. Most definitely not. Let's look at energy. And you can see it was threatening to come back up, didn't? And now we're going to see, does it come all the way back down? Does it live in this area for a while? We would love to see some stability. Interesting reports about inflation, that less of it was due to energy than initially thought, and more of it due to what could be considered price gouging. Those bastards. How are we doing on the watch list? Weigh in for me, because it's quiet. Everyone went quiet. Do you see any trade? What your course of action should be? How are you feeling? How is it maintaining patience right now? Etc. Etc. Are you guys still hearing me? I'm not getting any responses. I'm a little concerned no one's hearing me now. Am I talking to myself? Are you guys still there? Test, test. Yes. All right. Thank you, Dennis. Closed a couple of bullish trades today. I like that. That makes sense. Good sound. Good. I like that, Fred. I think that's a good course of action. If not close the trades, at least close a portion of those trades, tightening up the stops, and then going from there. So I definitely agree with that. GERN, is that a symbol? Let me go see. I'm not familiar with that one. Garon, okay. It's kind of flat. Hoping for the breakout at 5. Makes sense. Makes sense. Let's go look at the rest of these. Let's go see how financials look. And there you can see again what's going on. We hit resistance. We're all the way back up here. And now we're wondering, are we going to get a consolidation followed by a bounce? Makes sense. XLI, similar position, but we don't really have the bounce forming yet, right? We don't really have that bounce forming. XLK, bullish, pausing, while as this thing just keeps on pushing a little bit higher. XLP, we have Staples. I mean, yeah, I don't get it. This is baffling to me. It seems defensive. Out of nowhere, it seemed to just over the last week, it accelerated. So yeah, this is flagging me for caution. I want to look at this weekend in my sector rotation and try to get a sense like, why is that happening? That doesn't compute. Utilities, less so. In fact, back here, utilities shot up, and that made sense because the market was dropping. Now it's not making as much sense. Actually, it kind of does. Let me get to that. And then it pulled back, and now it's 2 stocks. WMT, bam. TGT, bam. Those 2 are pulling them. So, yeah, I don't think it's defensive. I think it's the fact that Target and Walmart intersect on somewhat of a discretionary level. So I take it back. I know why. I'm not concerned by it. There's industrials pushing high, looking good. Oh, we already did those, didn't we? Here's healthcare. Healthcare is like the leader. It's at all-time highs. What's going on there? Anyone trading in the healthcare sector? If not, if this thing drops down and finds some support anywhere 151, 152 or above, I might think about, if not picking an individual, I might at least trade the ETF, XLV itself. Why not? XLY, consumer discretionary. Actually, whatever strength we've seen from consumer staples, I want you to notice this thing has really popped. I mean, that is strong. I like that. Any pullback looks good. Okay. I mean, we're not going to do something just for the sake of doing something, right? That's not in the cards. Right now, what do we see? Mostly we see things that are overbought, that are at resistance, or if it's the case of financials and maybe a couple of technology stocks just starting to consolidate. Great. This last week has really forced us to be patient, to manage, to ride what we could, and then be ready to move the other way. So here we are. I like the list. When you look at the list and you think about the companies that are showing us strength, Apple, Amazon, Bank of America, AXP, Citi, Caterpillar, Costco, Google, Meta, JP Morgan, right? And then you go look at our heat map. Where's my heat map? There it is. Let's reload this. Now, don't look at today's colors. That's not what I'm concerned about. Do we have what we need for this market to be sustained? Costco, Walmart, Coke, Amazon, Meta, Google, Apple, Microsoft, Nvidia, JP Morgan, AXP, Bank of America, Citigroup, right? So as you look at Home Depot, as you look around at what we have and what it's representative of, yes, the things we have, if we see the momentum that we're expecting, are enough for us to then expect it to be sustainable because of the breadth. We're seeing this across 5 sectors, not 1 or 2. This momentum is across all broad 5 core growth sectors: financials, industrials, technology, communication services, and consumer discretionary. I think things are shaping up nicely. We just had a real quick, fast disruption. Wasn't quite a full correction on the S&P, but very close. Okay. Dust off, learn, adjust. Let's be ready to go. Let's go win award gold medals. We're going to give you a few minutes back today. No reason to just talk to the end if there's nothing really to say. Oh, goodness. I believe that the buyers came in and did their thing. Whoops. So that's the wrong stock, first of all. So that's not going to be useful. Let's go to the right stock where it will be. Oh, look at that. Ooh-wee. What happened? The buyers came in here and then here. Now, I thought it might drop from here. Maybe it does, but it looks like Fred and Scott are going to win gold medals. Congratulations to us. Everybody else, you know what to do. Be ready to try harder next time. I'll be back on Friday morning, 9:15 a.m. Eastern time, 15 minutes before the market opens. I'll have a hot, full, fresh cup of coffee. We'll be ready to chat about what's going on, especially what's going on in Jackson Hole. And then we will go from there. All right. Well, it's good to see everybody. Numbers picked up a little bit. We got to get people here. This market's turning into what we want it to turn into. We should be excited. I'll see you guys Friday. Have a great rest of your day. Have an amazing Thursday. I'll see you Friday morning. And as always, happy trading.